Welcome back to the deep dive.
Good to be here.
So today we're tackling something we're seeing a lot about, the US dollar. It seems to be, well, dropping a bit lately.
It certainly does. We're mainly looking at a Washington Post piece by David J. Lynch today, which gives some really good context.
Brett Lynch's article. And our goal is, to figure out why it's dropping and what that might mean, especially with these new tariffs in the mix.
Exactly. It's all about how these economic policies, particularly the tariffs, seem to be hitting investor confidence.
Wow.
And you see that reflected right in the dollar's value.
And it's happening fast.
Yeah, that's what stands out. Lynch highlights nearly a 10% fall since the last presidential inauguration.
10%, yeah.
And get this, about half of that drop just happened this month, pretty much as these tariffs started to really roll out.
Okay, so a big drop, very recent.
Yeah.
The article mentions the dollar is near three-year low against the euro. What does that actually mean for, regular people?
Well, for one, if you were planning that trip to Europe, your dollars just won't stretch as far. Simple as that. Everything costs more when you convert it.
Okay, makes sense. Travel gets pricier.
And back home, it means imported stuff,
Yeah.
electronics, cars, clothes, whatever,
Hmm.
could get more expensive. Potential inflation, right?
Uh-huh. Is there any upside?
There can be, yeah.
Yeah.
For U.S. companies selling things abroad, their products become cheaper for foreign buyers, so potentially good for exporters.
Okay. But here's where I get a bit confused. Tariffs. Don't they usually strengthen a currency?
That's the textbook theory, absolutely. You'd think, okay, tariffs mean people need more dollars to pay for U.S. goods, or the tariffs themselves driving up demand.
Right. So why the opposite now?
Well, this is Lynch's key point, really.
Yeah.
He argues the way the administration rolled out these tariffs has been, I think his word was sloppy.
Sloppy. How so?
It seems to be creating doubt among investors, like about competence and predictability. He even quotes David Page from AXA Investment Managers. They managed like $1 trillion.
$1 trillion. Okay.
And Page talks about concerns over the policy approach, not enough transparency, creating a distinct sense of unease.
A sense of unease. So it's not just the tariffs, it's the handling of them that's making markets nervous.
That seems to be the argument. Investors hate uncertainty, and if they're uneasy about policy direction,
They pull back.
exactly. Lynch notes they're starting to shift away from U.S. securities and therefore the dollar itself, which of course pushes it down further.
Mm. And Lynch also brought up something weird in the Treasury market, didn't he?
Yeah, that was interesting. Usually when things get rocky globally, investors pile into super safe U.S. Treasury bonds, right?
Right, the safe haven pushes yields down.
But Lynch points out that recently, the yield on the 30-year bond actually ticked up, I think, from 4.4% near 5% in a week, even while the dollar was falling.
That doesn't sound right. Why would that happen?
It's definitely not the usual pattern. It could suggest that maybe some of that usual flight to safety isn't quite happening, or maybe investors are demanding a higher return because they see longer-term risks, perhaps linked to these broader economic concerns.
And those concerns loop back to the tariffs again.
It seems that way. Lynch mentions a USA Today report, too, saying some forecasters are worried the U.S. economy could nearly stall or slip into recession because of the tariffs.
Recession, that's obviously a major worry.
It is. And Lynch emphasizes that, a lot of economists share this view. Widespread tariffs just make a recession more likely.
And if that happens, stocks take a hit. Maybe the Fed cuts rates.
That would be the typical playbook, yes. A recession would likely hurt stock prices, and probably prompt the Federal Reserve to step in and cut interest rates to try and stimulate things.
So basically, Lynch's conclusion is, all this makes the dollar just less appealing for investors. It's like a cycle. Tariffs cause unease, dollar weakens, investors get more uneasy.
That sums it up pretty well, yeah. The mix of the tariff policy itself and this perceived lack of maybe clear communication seems to have contributed to the dollar weakening and definitely stirred up these concerns about a potential economic slowdown.
Right. So as we wrap up, something for everyone listening to maybe think about. When you see these big shifts in global economic policy, like tariffs, how might that actually ripple down and affect, your own wallet, your investments, or just the price of things you buy every day?
Definitely something to consider. It's all interconnected.
Indeed. Well, thanks for diving into this with us today.